IMS Financial Services, fixed annuities, with safe money investing concepts. Your success is our business. What are the 3 things you can do with your money? Spend it, invest it, save it. Invest or save your money. Invest $400,000 and be exposed to market risk. Investments are in assets such as stocks, bonds, mutual funds, and variable annuities. With investing, you have market risk to your principal with an opportunity for gain. How about saving $400,000 with no market risk? Savings are in assets such as CDs, government issues, and fixed annuities. With savings, you have no market risk to your principal with an opportunity to gain. So why would anybody want to put their money into an investment program where you might lose your principal versus a savings program where there is no risk to your principal and both programs have an opportunity for gain? Common investment programs: stocks, bonds, mutual funds, and variable annuities. Which investment is the riskiest? Stocks, and the reason is because of unlimited risk, you may lose your principal. Why put money in a safe money concept savings program? You have no market risk to your principal. You cannot lose your principal, and safety of your principal is a major concern. Where are the 3 best places to save your money? Government, banks, and insurance companies. Why should you save in fixed annuities? Safety is the main reason. You are guaranteed not to lose your principal. Regulated by state insurance departments. Legal reserve requirements placed by the states. Tax-deferred growth. Guaranteed minimum return on your money. The ability to access some of your money each year without any penalties. The opportunity for a guaranteed lifetime income stream. Use safe money investing concepts. What is the key to both CDs and fixed annuities? Both have safety of your principal. Almost all assets are owned and protected by insurance companies. The power of tax deferral in a fixed annuity is triple compounding. First, you earn interest on the principal that you invest, then you earn interest on the interest that you accumulate, and then you earn interest on the interest that you do not have to pay taxes on. Stop paying taxes on the interest that you earn. The power of tax-deferred compounding. Let's take a look at how long it will take to have the same amount of money in a taxable account versus a tax-deferred account. Let's use 20 years as an example. What you will earn in 20 years, it will take you 26 and a half years in an account where you have to pay a 25% tax rate. And if you're in a 33% tax rate, it's going to take you 29.6 years to earn the same amount of money that you will earn in a tax-deferred account in just 20 years. My personal viewpoint: there are 2 major types of savings programs. First, CDs. They should be used for short-term savings, 1 to 3 years, which are issued by banks. Second, fixed annuities should be used for mid to long-range savings, 3 to 15 years, which are issued by insurance companies. Let's take a look at how the cash account value grows inside a fixed index annuity that has a 100% annual point-to-point participation rate and shares in the index growth up to an 11% annual cap and is linked to the S&P 500. I'll let red on this chart represent the movements of the S&P 500 index, and green will be the internal growth rate of the cash account inside the fixed index annuity. And by the end of the first year, 1999, the S&P 500 has grown 19.51% and the annuity grew 11%. Remember, the annuity has an 11% cap, which means that in any one given year, the annuity's cash value account can go up by no more than 11%. So right now you might feel like you're a little bit cheated because you did not see the full 19.51% growth in your cash value of your account. But let's take a look at what has happened at the end of year 2000. The S&P 500 dropped 10.14%. The value of the annuity remained unchanged because once a level of increase has been achieved in the cash account of an annuity, it can never go down due to the annual reset feature. By the end of 2001, the S&P 500 dropped 13.04%. The value of the annuity remained unchanged. By the end of 2002, the S&P 500 dropped 23.37%. Again, the value of the annuity remained unchanged. No increase, but also no decrease. By the end of year 2003, the S&P 500 went up 26.39%, and the value of the annuity went up 11%. Now notice that the absolute value of the S&P 500 is below where it started at the beginning of 1999. But the way the accrediting system works in the cash value annuity, it's based upon the movement or direction of movement of the S&P 500, not the absolute value. Now over the next several years, 2004 through 2007, the S&P 500 grew because the economy was robust and the value of the fixed indexed annuity cash account also grew. But by the end of the year 2008, the S&P 500 dropped 38.24%. The value of the annuity remained unchanged. The S&P 500 index performance total growth is a negative 10.27% after 10 years. Total internal growth rate of the annuity's cash account value is 48.82% after 10 years. So the internal growth rate of the American General Vision Vantage 9 fixed index annuity program gave a 59.09% greater growth than the growth of the S&P 500 index. You enjoy the growth of the market on a tax-deferred basis, but are not in the market. You share in all the increases, and you experience none of the decreases in the market. In this case, zero is your hero. Like with all the best made plans, the future is not always certain. Without this umbrella of protection, your loved ones could be left out in the rain. $2.3 trillion, that's a T, trillion, lost in retirement savings plans in 2008. People who saved their money in a fixed annuity did not lose a penny. Procrastination. Putting off until tomorrow what you should start today. Time can be your worst enemy or your best friend. Your future starts today, not tomorrow. When do you want to start your safe money concept and start saving for your future? If there are any questions, feel free to call, email, or fax me. And thank you for taking the time to view this short presentation on safe money investing concepts by using fixed annuities. Thank you.